What a day in the market. It is up over 3% today. And not only that, in our weekly recap video that we posted over this weekend, we did predict a big short squeeze after FOMC, their meeting that they had today, which is indeed what happened. Just a massive squeeze off of that. And what's crazy is, from our prediction over the weekend, we thought a lot of these puts that we were seeing from the previous week would actually be converted into having to close those positions, which would just fuel this short squeeze, which again did end up happening. And we did predict that there would be a retest of this diamond pattern that we have on here. And basically this diamond pattern that we're seeing is a very bearish setup in terms of the midterm. However, the reason that we saw a potential rally forming was, one, we saw the put flow come in near the end of the week, which we thought could be converted to that short squeeze. But then also we were behind or below this diamond, which could potentially predict that there could be a retest of this line of the diamond before further downside. So that's indeed what we did see today. And now what I want to kind of go over is what is next for SPY, what we need to be careful of, because if you do remember from the video, I did predict we'd have a rally and then a potential crash after. So this is what I'm going to explain today. Okay, so first I need to explain kind of why this is bearish in the midterm. So we have a head and shoulders pattern on the S&P 500 here. We have the left shoulder, the head, and then the right shoulder. Remember, this is characteristically a bearish pattern and one that has a lot of probability of success in the end. So this is one bearish thing. Two, we have this diamond pattern, which I just referenced earlier in this video. This is also bearish. Plus, three, the fact that we fell below the diamond pattern and have now are retesting this level that we fell down below. These are all very bearish predictions for a potential accelerated sell-off in the future, which could mean a crash. So the fact that we're retesting now is going to be interesting. We want to see how it retests and if it's able to actually, if we go over here, if it's able to actually hold above this box that I'm drawing. So this box here is basically our really strong resistance range that we're going to approach. So one, we're going to retest the bottom of this line here. And then also there's the potential that we could get above that and kind of grind up until 4,400, which, by the way, there is, and not a lot of people know this, there is a gap right here in the S&P 500 that not many people notice. This wick to the candle body is a gap that occurred a few days, I think it was 3 days ago from the past week. Yeah, right here. So this is a gap. Remember, wicks do not count as an opening on here. It's only the body of the candle that we count. So this is a gap, and there's a potential gap fill that we may see later this week or maybe early next week of this level. So that's one thing to note. That's around 438. So do note that. But then also, what I want to talk about is that we saw a big print in the dark pools, and this happened on 5/2, so this was May 2nd, and we saw 6.4 billion at that 412 level. That is very, very bullish, the fact that we were able to hold over this. So this was most likely, well, most definitely a buy. We saw this level, and we did share that on our Twitter where we were talking about a lot of accumulation occurring near lows, which did help us with our prediction of this big push off of where the lows that we had earlier. So this was another indicator that we used to determine this big rally that we had. And also 6 billion, anything over 6 billion, that is a lot and typically lasts in a multi-day uptrend at the very least. Typically those could even go for multiple weeks. So that also gives me confidence that we could see within this range being tested at some point later this week and then early next week, like I said. So don't necessarily short because you think, oh, this thing's doomed from the start and Ben says that, hey, there's a crash coming. Remember, it's all probability in the market and we look for the best risk reward at the end of the day. Right now, risk reward is not favorable yet for the downside because we know this market likes to go to extremes, and an extreme in this case would be a little bit over 4,400 on SPX, which would be like 442 here on the S&P 500. I could see it going all the way up until then and still crash. Honestly, if you really want to be extreme, this thing could go up to 452 and still crash off of that. So there's a very wide range, and that's why you really need to be hesitant not to short yet, because there still could be a ton of upside before we see that potential accelerated selling afterwards. So do be careful with that. Did want to come in and share this video today. I do see some more upside, but again, in this box, this is going to be kind of like chop and potential selling, so do be careful in there. But if you did join with this buy near lows at like 408, 409, kind of like we talked about in the Discord, this was a very good trade, and I'm just leaving the rest as runners for now. So very good right now. But again, do be careful. I have a danger window between May 12th and May 20th for the market. So when time and price meet in my danger window, that's going to be something interesting. It'll be around this time over here, and maybe we do see that accelerated selling off of that. But we're going to go day by day from now on. As of now, the trend is bullish, so do be careful if you want to play the counter trend. You can learn from the past, like over here, that if you try to play the counter trend, you need to be really careful because this thing could rally. So just wanted to show this today, and honestly, today was a really good day in the market, and glad to see all of you guys profiting as well. And if you are interested in learning a little bit more about the market and how to use our software, do join the Discord group below. It is free, and I'll see you guys in the next video.